Hello, I'm Shae Russell from ABC Bullion, and joining me today is commodities investing legend, Rick Rule. Rick, how are you today?
The better for talking to you, Shae. It's a great day. I'm happy to be with you.
Look, I'm thrilled to have you here with the ABC Bullion audience. Now, I've noticed that you happen to have a different background. Tell me, have you managed to sneak across the border, and are you back in Vancouver?
The Canadians, in their wisdom, allowed this gringo to come across the border, COVID lockdowns notwithstanding. So I'm back in the city where you and I first caught sight of each other at one of our conferences years ago.
Yes, and I'm devastated that I couldn't be there for this year's conference in person, but that's okay. I have hope for 2022. Now, well, we're going to kick straight off today. We've got a few topics that we want to cover. First and foremost, I want to talk about gold. Look, gold's been kicked around a little bit in the past couple of weeks. Quite topical right now is the flash crash that we saw a few weeks ago. There was a near 8% slide in the gold or the US dollar gold price. It was a little bit bigger than the Aussie dollar gold price. It was unexpected. Now, obviously, it was a liquidity issue. It was driven by, major Asian banks being held, but it seems to have changed the trend. Gold was in. It was in an uptrend, but it's now in a downtrend. Now, you and I tend to not get into the technical price action, but I want to know, has this changed the sentiment behind gold in your eyes?
I don't think it has. I still don't think that gold is a popular asset class for an audience that's assembled by Australian bullion. Obviously, your audience cares about and knows about gold. But if you take it to a broader investing universe, either in Australia or the United States, gold is either a non-entity or a four-letter word in the pejorative sense. And so while that flash crash was perhaps important to us, I don't think it was important to the world at large. I think it will be. It's interesting that there is a class of traders around gold. I look at gold as an insurance class. I look at it as something that you buy and you pray it doesn't go up, because the set of circumstances that makes it go up is unpleasant in the rest of your life. But there are other people who believe differently than me. And I'm occasionally confronted by normally a young person who says something to me like, I've been in this trade for 2 weeks. When's it going to work? It's interesting that when people look at the flash crash too, people look for data that supports their existing paradigms and prejudices. If people are nervous about the gold price, the fact that gold was down 8% in 4 hours is more topical to them than the fact that gold recovered all of the lost ground in 10 days. Did we have a flash crash, or did we have the repositioning of a loose piece of gold? I guess it's all how you look at it. Shae, you're going to hear me return again and again in any discussion about gold to the fact that from a historical perspective, gold is very underowned. And I'm using gold as a sort of a catch-all for precious metals. Precious metals and precious metals related assets comprise less than 0.5% of the value of investment and savings assets in the United States. They are as relevant to financial markets as a pimple is on an elephant's behind. What's important to note is that the 3-decade mean market share is 1.5%. If precious metals only return to mean, now this is not going to happen in 10 days or 2 weeks, but if they only return to their mean over 3 to 5 years, which is precisely what I personally believe is going to happen, demand for precious metals will triple in the largest savings and investment market in the world. Traditionally, in gold bull markets, Australia is even more manic than the United States. I'm not suggesting that that's going to happen this time, but it's a resource-centric economy with resource-centric investors. And traditionally, the response in Australia is even more aggressive than the responses in the United States. So I think it's more likely than not, on both sides of the Pacific, if you will, that demand for precious metals over the next 3 to 5 years will surprise people and surprise them to the upside.
I want to get, you mentioned young people are frustrated that they're not seeing gains within 2 weeks. Now, I've had this conversation with people a little bit younger than me that gold isn't meant to be a cryptocurrency. It's not meant to frighten you every time you open your portfolio. Tell me, how do you convince the kids of today, and let's say the age bracket's 25 to 35, how do you convince the kids of today that gold is an investment they should consider?
It's a process. Shae, I remember 5 years ago talking to you about how we could attract a younger audience. And while we were busy looking for how to connect to them, they found us online. It was a problem that solved itself. And I suspect that in addressing a younger audience politely, taking them through the fact that, at least in my life, making real money has always required 3 to 5 years, not 3 to 5 weeks, is useful. The way I connect, particularly with regards to precious metals and young people in the United States, is I personalize it. What I say to young people is government debt and deficits and the underfunding of pensions in North America is an income transfer from young people with small incomes to old people with large incomes. In other words, from young people to me. Now, I'm okay with this. I voted myself all kinds of cool benefits. I forgot to pay for them, and I'm leaving kids the bill. I could understand if kids would feel aggrieved. So what I tell younger people is, if you are comfortable with a situation where I get all the goodies and you get all the bill, you probably don't need to own gold or silver. If, however, this feels inequitable to you, if you feel like you need to protect yourself from me and my generation, you need to own gold and silver. It's a financial asset that can't be debased by old people like me stealing your future. And when I put the message like that personally, I get a very different response than when I talk about gold or silver in an esoteric sense. And the lovely part of that message, Shae, is it's true. I mean, it would be, I guess, lovelier were it not true. But in terms of a way to convey the message to younger people, if you explain the current political status quo in the world as theft, intergenerational theft, which is what it is, all of a sudden the message becomes personal and profound as opposed to esoteric.
That is a fabulous answer. And I will be using that phrase, intergenerational theft, occasionally. So don't be surprised if I copy you. Now, I'm just going to switch gears a little bit and move to the forgotten precious metal. We're going to touch on silver, but we're not going to touch on the hyperbole that's been around silver for the past couple of months. There's been a little bit of excitement on silver around the threads. One thing we've noticed here at ABC Bullion this week in particular, we've seen a lot of interest in investors buying physical silver. So why do you think there's some, without the Reddit threads driving investor interest in silver, do you see a long-term case for owning physical silver that complements owning gold?
My experience, Shae, and I'm talking about history now, is that in the second half of a precious metals bull market, silver outperforms gold. The gold buyer is a fear buyer, and he or she is first. But when momentum takes hold, then silver moves into high speed. In the two major bull markets that I've lived through in my life, in the second half of the bull market, which I suspect is a year or so away, silver moves further and silver moves faster than gold, both because the silver buyer is, if you will, a manic depressive, but also because the unit cost of silver is smaller. And poor people in emerging and frontier markets that need protection for their own savings are more able to afford silver than they are gold. And so my suspicion will be that the point in time will come where silver handily outperforms gold, not for any sort of mysterious reason, pardon me, but simply because I've experienced that twice before in my career, and it's been really profound.
Now, I would like to touch on an unloved commodity class and something that doesn't always make people feel a little bit warm and fuzzy on the inside. I want to talk about the uranium market. Now, you have been a long-term uranium bull for quite some time. However, it's not something that many investors love. Tell me, why are you interested in investing in this commodity?
I think I have three reasons. The first is because it is unloved. Mostly in my life, when I've made spectacular amounts of money, it's because I invested in a sector that was unloved, that became more investor friendly. Things that are unloved are cheap, and there is nothing as unloved as uranium. When you talk about the uranium thesis, people immediately go to Hiroshima, Nagasaki, or 3 Mile Island. It's interesting that when you talk about government, people's mind doesn't go to World War II or World War I, but that's just the way life works, I guess. At any rate, so the very fact that it's unloved makes me love it. But more importantly, the arithmetic and the physics behind uranium are attractive to me. Even in markets like the United States that believe that they're rich enough not to have to rely on nuclear power, they do. 13% of total electricity demand in the United States comes from nuclear power. 20% of baseload demand comes from nuclear power. The physicists tell us that a 3%, anything below a 3% plurality of supply over demand leads to rolling brownouts and blackouts. So if you took away nuclear power in the United States anytime in the next 6 or 7 years, the lights would go out. And I don't think, Shae, that the lights are going to go out. But at $34 a pound for yellow cake, which is what the spot market is, the industry's total cost of production is somewhere between $50 and $60 a pound. So you make this stuff for 50, you sell it for 34, you lose $16 a pound. It gets rather boring over time. Either the price of uranium goes up enough so that the industry earns its cost of capital, or there's no more uranium and the lights go out. So that's my second reason. The arithmetic around uranium is spectacular. The third reason, Shae, frankly, is greed. The last uranium bull market, the 2000 to 2007 bull market, was the single most impactful financial event of my lifetime. An Australian stock, Paladin, under the stewardship of your friend and mine, John Borshoff, went from a financing we did at 10 Australian pennies to 10 Australian dollars in 6 years. That is an event that has, at least in my experience, never been, or pardon me, in my portfolio, never been duplicated. And I'd love to have something even vaguely resembling that happen to me one more time before I shed my mortal coil.
I do remember that stellar rise in Paladin. I was a young research analyst at the time, and it was an incredible story to watch unfold. Now, speaking of watching stories unfold, the Rural Investment Resources Conference recently happened. It was virtual this year. It was virtual back in 2020. So the last time I saw it in person was in 2019. So I really hope things change for 2022 so I can get a spot there next year. But let's recap what happened this year in 2021. So back in 2019, the hot topic that came out of your conference was gold. Was explorers. Everybody was very excited about the exploration market, and money was actually coming into this sector for a change. Fast forward to 2020, and this was just before gold went on its spectacular rally to crack over $2,000 per ounce, and everyone at your conference there was talking about gold. Tell me, what was the hot topic that came out of the 2021 Rural Investment Resources Conference this year?
I think there were two themes. One was the relative underperformance of the mid-cap gold stocks and their relative attraction. Companies that are sort of in the $1 billion to $3 billion range, maybe single asset producers, are selling at the lowest proportion of net asset value to enterprise value that they have in my career at current gold prices. So the relative attraction of that sector, which is very, very, very underloved institutionally, was important. We actually could see response in various names that we follow, including some Australian names, because the volumes in these stocks were so depressed that even the conference itself moved them. That was important. The second thing that came out of the conference is the same lesson that the conference has taught for 20 years, which is that people matter. What we learned from investor after investor after investor, and what we particularly learned from the Living Legends panel, which, as you know, Shae, is where we have people, not gurus or analysts, but people who have built multi-billion-dollar companies from scratch, talk about the lessons that they've learned building those companies and how the lessons have made them better investors. So much of our business, particularly in the small cap sector, is a function of people, but it's also important in your business, bullion dealers. There's a lot of folks that sell bullion. How many people have a representative variety of products? How many people can tailor a bullion portfolio to the needs of an individual investor? How many people have intelligent storage options for people? Business after business after business is about customer-facing people and about the executives that drive the business forward. And that came through so clearly in this year's conference. And I think it's such an important lesson. There's usually a premium around superior performers relative to average performers. And when I was younger, paying that premium bothered me a lot. Now I think that the premium is probably rationally too little. That paying up for a superb human being that is your partner, in other words, if he or she owns a bunch of stock themselves and isn't working for salary, isn't working for options, but rather is working to build a very, very, very large company. There's no guarantee there is going to be a success, but the statistical probability around their success is so much greater than the normal aggregations of butchers, bakers, and candlestick makers that you see in the junior mining sector, that it's worth paying up. I think that was the primary lesson that I hope people took home from the conference.
Look, I would hope so too, because one thing in my former time as an analyst, I highly recommended people find their gurus and follow them. Now, I know on that Living Legends panel, where you're right, you're talking about people who have created multi-billion dollars. You've got Ross Beatty, Rob McEwen would have been on there. And there's obviously other names that I can't think of off the top of my head, but I do hope that everybody enjoyed that, because in the past, that has absolutely been my favorite segment as well. Now, before we wrap up for today, I have one final question for you, and I believe you might have an offer for everybody listening as well. So we'll do my final question, and then I'll get your final offer.
Great.
First of all, I would love to know, what is the one thing that you can sum up briefly for new investors to gold? What is the one thing they need to know about gold?
Gold does well when investors are concerned about the ongoing purchasing power of their savings in conventional savings instruments in their home currency. And if in the current environment, with quantitative easing, debt and deficits, and negative real interest rates, you aren't concerned about the purchasing power of your savings, you probably need to consign yourself to poverty over time. That's a simple declarative statement, as simple as I can make it. I hope I'm wrong. I think I'm right.
Rick, that is a perfect statement to make on gold and why investors should consider it. Now, before we wrap up today, I believe that you have an offer for everybody listening.
I do. I enjoy talking to your audience, Shae, and I'd like to give them an incentive. Any of your listeners who care what I think about the topic that's really of interest to them, which is to say their portfolios, are welcome to find out. If you go to a website, sprottusa.com/rankings, you can enter your natural resource portfolio. Please, no cryptocurrencies. Please, no marijuana stocks. I will rank your portfolio 1 to 10, at least for the names I know. I'll comment on individual issues if I think my comments might have value. And just for fun, I'll throw in 2 visual aids. One, the Barron's Gold Mining Index, which is the most inclusive worldwide gold equities index that exists. Not for technical analysis, but rather as a visual aid to understand the anatomy of gold bull markets. The second is the Goldman Sachs commodity chart, which talks about the relative valuations of industrial commodities relative to other asset classes going back 100 years. I personally believe, given the importance of commodities to the Australian economy, that everyone in Australia should have this chart taped to their refrigerator. And I'll make it my mission to do that as well as I can with your listeners. So one more time, sprottusa.com/rankings, where I'll rank your natural resource portfolio. If you mention charts in the question section, I'll send you the Barron's Gold Mining Index chart and the 100-year commodity chart.
All right, Rick. Well, that's all we've got time for today. Once again, thank you very much for joining me.
My pleasure. Thank you for having me on.
Thanks, Rick.